Good morning, students. Today I'll start my class with an apology for this delay. There was some technical error happening. I know all of you have been waiting from past 5-7 minutes, and we are really sorry for that. There were some technical issues because of which we were unable to get live, even though I was ready with all the gyan that I have to be shared with you. But however, because of these reasons, we couldn't make it. Okay, so now that we are back, now it's time to start or restart with what we had left in middle. So in the previous class, we were talking about that whenever there is a public offer of securities, firstly, a prospectus has to be made, which is to be given to the public. And prospectus is nothing but an invitation, right? Where people are informed that the shares of so-and-so company are available for sale, what are the prospects of the company, what are the financial ROIs that you can look into, and accordingly, people who are interested can invest the money in that company. Now, along with that, there are certain requirements that have been provided in law read with the associated rule, which is called the Prospectus Allotment of Security Rules, and we also call them the pass rules. So in the previous class, because we are starting somewhere in middle, so I will briefly reconnect you to what we had discussed in the previous class regarding the dematerialization of security. So in the previous class, we firstly spoke about section 29. And section 29, what does it provide for? It provides for mandatory issue of securities in dematerialized form. So section 29 categorically said that every company which is going to make a public offer or such other class or classes of company as may be prescribed, they can issue the securities only in demat form by complying with the provision of depository acts and regulations made thereunder. So whenever they are issuing securities, securities will have to be issued in the demat form, and they will have to comply with the depository act, right? Now, there were a situation where there was a transfer of holding and transfer of security. So it also said where such class or classes of unlisted company as may be prescribed, the security shall be held or transferred only in demat form in the manner laid down. So where there is a transfer of security happening, it is also to be done in the demat form. Plus, if there are any other form of company, like it is not a listed company, it is not an unlisted company, they have their own choice. They are free to decide if they want, they can convert their security in demat form, or if they want to keep it in the physical form. So this was what was provided in section 29 of the Act. Then we had started talking about Rule 9A of the Prospectus and Allotment Security Rules, which is called the pass rules. So pass rules, we saw that due to the amendment in 2018, the pass rules engulfs in its ambit the unlisted public companies as well. So if you are an unlisted public company, you will have to be bound by, or you will have to follow the rules that are laid in Rule 9A of the pass rules, right? So to whom the pass rule number 9A is applicable? It is applicable to all unlisted public companies, right? Please remember, it is applicable to all unlisted public companies. Do not misinterpret or just write the word public company. There is a difference between public company and unlisted public company. So when you're writing your answers, you have to be careful and specific. You just cannot go wrong there, because what you're intending to say, the entire meaning would change. So the Rule 9A that we are talking about, it is applicable to all unlisted public companies. So the Rule 1 of 9A said that every unlisted public company shall issue the securities only in demat form, and they will have to comply with the Depositories Act and regulations that are made thereunder, right? It also spoke about the next rule when we studied, it spoke about how the existing securities are to be dematerialized. So it was provided that every unlisted public company will facilitate the dematerialization of its security by making necessary applications to the depository. And every unlisted public company will inform their existing security holders about this facility. This facility is where they have arranged for converting an existing security into demat form. So whenever this convey this information, if the securities have to be converted, the existing securities have to be converted, they will be dematerialized in accordance with the provisions of Depository Acts 1996 and regulations made thereunder. So you need to understand, guys, when we talk about prospectus, securities, transfer of security, share trading, it is not just the Companies Act that comes into picture. It is Depository Acts, it is SCR, it is SEBI. So holistic, you get to understand the scenario only when you read all these 4 legislations. But as of now, you only need to limit yourself what company law is saying. If you get into holistic understanding of these concepts, trust me, each of the concepts will take at least 3 to 4 days for discussion and understanding, or at least 2 days bare minimum. So each concept with multiple legislations together are really wide. Okay, so I know as students, when you start reading, you get inquisitive. You have got those questions that what happens there, but sometimes it is important to restrict yourself to the points that are laid down here, because if you start going deep, there is no end to it. Even now, what you're studying, if you start reading case laws, if you start picking up jurisprudence, you'll see there have been a lot of variation on how courts have interpreted things, how laws have evolved. So I understand the challenge that you face, but we will restrict ourselves to the provisions laid down in the company law. Okay. So as per rule 2, the existing securities have to be in the dematerialized form, right? Now, whenever the company has to convert its existing security into demat form, they will have to secure a ISIN number. What is the full form of ISIN number? What is the full form of ISIN number? International Security Identification Number. So it is a unique identification number for each class of securities. If you would have paid attention, even books have one unique identification number. I think it is called ISN number, not ISIN. I think it's called ISN number, right? So these are nothing but the unique identification numbers. Then we also read that securities that are held by promoters, directors, and KMP, they will have to be dematerialized before the company makes an offer for issue of any securities, be it right issue or bonus issue, where it makes an offer for buyback of security, and the company will have to comply with the provisions of Depositories Act. So wherever company wanted to issue its security or buyback of security or have a right issue or bonus issue, in that case also it is mandatory for them to convert their existing securities that are held by promoters, directors, and KMPs to be converted into dematerialized form, right? Okay, coming further, I think I've got a query. So one of the student is having confusion with the meaning of listed and unlisted companies. So let us go back to the definition of public company. So a public company is a company which is not a private company, has minimum 7 members, right? And it does not follow the restriction whose shares can be traded freely, right? There are no restrictions on the transfer of shares of a public company. But does the definition ever say that for every public company, it is mandatory to immediately trade its share the moment it's incorporated? No, it never says that. We have a separate definition for listed company, which says the companies that are listed on a recognized stock exchange, right? So there are a lot of public companies which are public companies, but they have not sold their shares or offered their shares to public as such. they are allowed to freely trade the shares. They are a public company, but as of now, they have not traded their shares on a recognized stock exchange. So what are they? They are an unlisted public company. It also happens that a company was initially a private entity, then it got converted itself into public company, and after running its business for decent while and building a reputation in the market with its good financial, then it comes to the public and launches its share. It brings in new shares that are available for trading in the market. So these companies are what? These companies want to trade their shares, but as of now, they are not yet listed. They have not yet done their IPO. So this is what is meant by unlisted public company. So the rule says if an unlisted public company also want to offer their securities, they will have to convert their securities into a dematerialized form. Is that clear? So Aditya is asking me, ma'am, can private company become a listed company? For a private company to become a listed company, firstly, it will have to get converted itself to a public company, and then it will have to follow the due process for getting listed on a national stock exchange of India. Is that clear? So please remember, do not get confused on the basics. The definition of private companies categorically tells you that the shares of a private company cannot be traded freely. There are certain restrictions on transfer of shares. It is not that the shares cannot be transferred, but they are transferred within a limited inner circle. They are not freely traded publicly on a public platform. So a national stock exchange is a public platform. So it's just the way, if you look at an e-commerce platform, it is a public platform for selling your goods. But if you want it to sell your goods to the limited inner circle, you sell it differently. You sell it through exhibitions, you sell it through a special invite-based exhibitions. So if you go for art exhibitions, does everybody enter to some of these high-end art exhibitions? No, you need to have an invite. So there are selected few people who are sent an invite. They come visit the exhibition, and if they want, they can purchase the piece of art from there. So similarly, it is with the private company also. The invitation is sent to selected few. If they like it, they can put it in application for buying the shares. So Anu is asking me, being unlisted public company, can it issue shares to public in general? This is what we are talking about. So if you would have paid attention, I just mentioned that every unlisted public company shall ensure that entire holding of securities of its promoters, directors, KMP has been dematerialized before it makes any offer for issue of securities, or it makes any offer for buyback of securities, or it makes any offer of right shares, or it issues bonus shares. So it can offer its securities, but the requirement is they need to convert themselves into demat form. The securities have to be dematerialized. From the paper form, it needs to be converted to the electronic form, right? This is what is being said here. Okay, now looking at the next rule. So we read about this rule which said that if a holder of securities of an unlisted public company wants to transfer its shares on or after 2nd October 2013, he will have to get its securities dematerialized before the transfer. So if you are paying attention to the language of the legislation, you would understand this legislation is trying to control the transitioning from physical form of paper-based securities to electronic form. So it is saying that if you're going for a public offer, your securities have to be dematerialized. If you are an unlisted public company and you want to offer your securities, then also the securities that are being held by directors, KMPs, and promoters will have to be dematerialized. If you want to transfer your securities after 2nd October on or after 2nd October 2018 to somebody, your securities will have to be dematerialized, right? So the legislation, it governs that earlier the securities were in paper form. Now we want them to be in demat form. So for that slow transitioning has to happen. That is why we have so many checks and balances, right? Now, there were certain obligations that were provided for every unlisted public company, and these responsibilities we had already discussed. We also spoke about prohibition on defaulting unlisted public company. So if the unlisted public company defaults with its liability, it will not make any offer of security or buy back its security or issue any bonus or right share till the payment to depository or registrar is completed, right? Now, coming to the next rule, which talks about filing with the registrar. So it says, when you look at Rule 9A, Section 8, it says, every unlisted public company governed by Rule 9A shall submit form number PAS6 to the registrar with the fees within 60 days from the conclusion of each half year duly certified by a company secretary in practice or a chartered accountant in practice. So whichever company is or has their securities offered to it's offering its securities, it's an unlimited public company, it will have to submit form number PAS6 to the registrar. This form number PAS6 to the registrar is submitted half yearly. For every half year, it is submitted to the registrar. So when the half year completes, within 60 days of the conclusion of each half year, this form, which is PAS6, has to be submitted. And this form has to be duly certified by a company secretary in practice or a chartered accountant in practice, right? So, this is the requirement of filing with the registrar, which is a compliance that has been provided for under Rule 9A. Now, there can be situations where it might happen that there is a difference between the number of shares capital that is held in dematerialized form and that was issued to you. So there is always a scope of error, or there can be a difference. So how do you handle that? What can be done for that? So it is the responsibility that the shareholder, the company, I'm sorry, not the shareholder, the company will immediately bring to the notice of depository if there is any inconsistency in the issue capital and the capital held in dematerialized form. So we also have a grievance redressal mechanism. So if you have paid attention, even if you buy something from Amazon and there is an error in it, so there you have a grievance redressal mechanism. So here, since we are converting our paper-based securities into electronic forms, and if there are any differences in the quantum, so let's say we had issued capital of worth ₹100, but in demat form you can see only capital worth ₹98. So this difference has to be reported to the depositories by the company, and that has to be done immediately. Aditya, you are asking me, can the form PAS6 be signed by a CMA? Well, if you look at the rule here, it specifically says that it has to be signed by a company secretary in practice or chartered accountant in practice. It does not include CMA within its ambit. So there are places in the Companies Act where you see there are certain documents that can be signed by a cost management accountant, but not this. So this form, which is PA6, has to be signed by a certified by a CS or a CA. So we cannot interpret it to include CMA within its ambit when the language of the legislation is very clear. So what if the security holders of an unlisted public company has a grievance? What do they do? To whom should they reach out? So if you are a banking customer, if you are a customer of a bank, if you have any grievances, whom do you go to? You go to the banking ombudsman. As a consumer, if you have a grievances, whom do you go? You go to the consumer forum, the consumer redressal forum. Similarly, as a security holder of an unlisted public company, if you have any grievances, you reach out to the Investor Education and Protection Fund Authority, also known as IEPF, right? So you reach out to them for any of your grievances. And when you reach out to them for your grievances, the authority will initiate action against a depository or participant or registrar to an issue and share transfer agent after prior consultation with SEBI. So here IEPF has a broad powers on how they will investigate on the complaints and what actions they can take. Now, how the IEPF functions, this is not something that we are discussing in this class, but they can initiate action against the depository, the participant, the share transfer agent, or the registrar after consultation with the SEBI or the Security Board, Exchange India. Okay. One of the students is asking me so PAS is the abbreviation, dear. You are asking me the full form of PAS. So it's okay. I've already told you this multiple times, but I'm saying it again. PAS stands for Prospectus and Allotment of Securities. So this form PAS6 is the form for Prospectus and Allotment of Securities. Dear Surya, whatever I have mentioned on my presentation, everything has been exactly taken from your study material. I have not taken anything from anywhere else. I'm just explaining you the concepts as per the scope of your study material. Okay, one of the students is asking me the difference between a CA and CA in practice. So a CA, when he's an employee, he's just a CA. But when a chartered accountant runs his own practice, his own firm, and owns a certificate of practice, then he is called a CA in practice. So if you are an employee, you are not supposed to apply for the certificate of practice. It is only a practicing chartered accountant that will have a certificate of practice. So all the chartered accountants will be a registered member of ICAI. They will have the membership, but not every chartered accountant will have a certificate of practice. So COP is only issued to those chartered accountants who practice chartered accountancy. They are not an employee in a company and working as a chartered accountant. So there's a difference. Vijay Shankar is saying, private companies don't have shareholders, then how come they can issue bonus shares and right issue? My dear Vijay Shankar, your basic understanding is absolutely flawed here. Who told you that private companies do not have shareholders? When a private company is having share capital, they have shareholders, they have shares. So you need to go back to the basics. It might be very difficult for me to reiterate the entire basic here. Okay. So we know that for the grievances of the security holders, they can reach out to IEPF authority, and IEPF authority will take necessary action against the required person. So this was all about the Rule 9A, which is applicable to all unlisted public companies. But there is an exception to applicability of this rule to certain unlisted public company. Like the rule 9A does not apply to a Nidhi company, a government company, or a wholly owned subsidiary. So in the unlisted public company, there is an exception that is carved out. So unlisted public company, which is a Nidhi company, a government company, or wholly owned subsidiary, on these companies, the rule 9A will not be applicable. Students, for those who are not able to find the rule, I am requesting you to go to the ICAI knowledge portal and download the study material that is applicable for May 2021 examination. So maybe that you have picked up the older study material. If you look at the new study material, you will be able to see it. It's there, okay? So why has a lawmaker put so much of attention on dematerialization of securities? Because there are certain benefits attached to it. Now, this is not something that is a part of your syllabus, but you must know that why is this happening. So dematerialization helps reduce the risk of issues like loss, theft, mutilation, fraud, etc. So there used to be mutilation of share certificates, theft of share certificate, which used to make things difficult. Pooja, I am reiterating for all the students that for your May 2021 examination perspective, we have to limit ourselves only to the amendments till 31st October 2020. There are several changes that have come up after that. They are not a part of your syllabus. So you have to strictly abide to your study material for May 2021 examination, right? You don't have to take up the new amendments that are coming in. So here we are preparing company law for your examination point of view. For upgrading your knowledge, you can very well read the new amendments as well. That is not a problem. But for your examination perspective, from the point of view of our lectures in the class, we will restrict ourselves to the updated study material that has been uploaded by ICAI for May 2021 examination. Is that clear, Pooja? Okay. So coming back to the benefits of dematerialization of securities. So earlier when people used to own physical certificates, a lot of times they end up losing physical certificate, or it got lost, or it with the age or with time, it was defaced. So to overcome these problems, we have dematerialization of securities. So I don't know if you would have ever opened a demat account. It is very much like opening a bank account. Just the way your bank account reflects the money that you have deposited, the demat account reflects the securities that you have purchased or sold. So if you look at the statement, it will tell you the securities that you purchased, what amount that you paid for, currently what is the amount, what is the value of that securities, how much profit you have made, and what if you sell the securities, what will be the amount that you will make, right? So this is how it functions. Now, it not just reduces the risk of loss, theft, mutilation, but it also improvises the governance systems and increases the transparency, right? Plus, there is a ease in transfer, the paperwork has been reduced, trading of shares has become extremely easy. You have a demat account in HDFC Security, just a click, you buy the security. Another click, you sell the securities. So it has become quite easy, and plus people have also got exemptions from payment of stamp duty on transfer. So it has brought in a lot of benefits with it. So Shobna is saying, ma'am, please explain every section and concept with example. Well, Shobna, it is not really possible for me to take up examples for every little concept. There are certain concepts which cannot be understood in standalone. There can be an example to a holistic thing, but for you to be able to cite an example for entire share allotment process would be really difficult. So I have been trying to explain you things with concepts, but what kind of examples that you are looking at, I'm really confused here. Mutatis mutandis means along with. So together, this and this both. Pooja, the rule 9A is applicable for May 2021 examination, and this was included only in the new study material that has been released. It's not included in the old syllabus. Well, Kirtana, it is always good if you can cite the form numbers. It can be a really good practice to know which forms need to be filed. Now, guys, can we come to the next topic if you're done with your queries? Okay, so coming to the next section, which is section 30. So section 30 of the Companies Act talks about the advertisement of prospectus. So whenever a prospectus is published, there are certain requirements that are to be fulfilled. So if you reconnect, when can a prospectus be published? It can be published within 90 days of registration with the registrar. So the publication has to be done within 90 days from the date of registration of the prospectus with the registrar. So don't goof up with that. So when you look at section 30, it provides when in any manner the advertisement of a prospectus is published, it is mandatory to specify the contents to the memorandum of the company regarding the objects, the members' liability, amount of the company share capital, signatories to it, the number of shares subscribed by them, the capital structure of the company. So these information have to be categorically provided for whenever there is a advertisement of prospectus, right? There's nothing fancy about it that I need to repeat. So I think it's good for all of you. Okay. Now, coming to our next topic, which talks about variation in terms of contract or objects in prospectus. Now, the question arises, is it permissible to alter the terms of contracts or object in prospectus? Yes or no? If yes, then how? Meenal, there are a lot of students that are requesting me to highlight the amendment area for this exam during the class. But guys, just reading the amendment, would it be enough for you? Any which ways you have to read the entire concepts. Students who have been asking me the meanings of the terms, I would request you to put in little effort at your end also and stop treating your faculty like a Google. There are a lot of meanings that you can just Google and read about it. So stop the habit of spoon feeding. I don't know how come students of this age are so much used to of ready-made answer. You never want to put in any effort of yours. This is not how you're going to become a successful professional. I'm really sorry. So for the meaning of pari passu, I would want for meaning of mutatis mutandis, these kind of terminologies which you get to see in law, read about it on your own. And come to me only when you do not understand, right? Now, coming to the concepts of variation in terms of the contract. So, there is section 27 read with the relevant rule which prescribes the procedure for variation in terms of the contract. So, rule 7 of the prospectus and allotment of securities rule along with section 27. So it is good to remember section 27, rule 7. 27, rule 7. So 27 may rule 7. So if you look at section 27, it says a company shall not. So it is a mandatory provision. A company shall not at any time vary the terms of a contract referred to in the prospectus or objects for which the prospectus was issued, except subject to the approval or subject to an authority given by the company in general meeting by way of special resolution. So the only way of altering the terms of contract or object in prospectus is by way of special resolution. So by way of special resolution, you can alter only the terms of contract or the object in prospectus, provided that the details as may be prescribed of the notice in respect of such resolution to shareholder shall also be published in the newspapers in the city where registered office situated and in a local newspaper as well, right? So this thing pertaining to advertisement, I told you before also that throughout company law, wherever there is a requirement for publication in in newspaper, there the publishing always has to be done in the city where the registered office of this company is situated. One. Second, the publication will have to be done one in English language and one in vernacular language and in the newspapers that have maximum circulation. So this requirement of publication in newspaper is consistent throughout the company laws. So wherever there is a requirement of publishing in the newspaper, you will see it will have the same language and the same provision, right? So the proviso to section 27 says, provided further that such company shall not use any amount raised by it through prospectus for buying, trading, or otherwise dealing in equity shares of any other listed company. So a company who has raised money through prospectus and it wants to alter its content, they cannot use any amount that was raised through prospectus for buying, trading, or dealing in equity shares of any other listed company. So there is a prohibition on this. Along with that, there is a requirement in section 27 which says that the dissenting shareholders or the shareholders who are not okay or who do not agree to this alteration in terms of contract or object, they should be given an offer to exit by promoters or controlling shareholders at such exit price and in such manner and condition as may be specified by the SEBI by making regulation in this behalf. So when the company is giving an exit offer, what will be that offer? What amount they have to be made? What would be the manner and conditions for making the offer? The regulations for them will be laid by the SEBI. So SEBI is supposed to make a regulation in this behalf, right? Is that clear? So what are the requirements for a variation in terms of contract or object? Firstly, a company shall not vary the terms of contract referred in prospectus or object for which the prospectus was issued unless a special resolution is passed in the general meeting and the prescribed details of the notice of the general meeting are published in newspapers. The requirement for publication in newspaper is same. The publication has to be done in the newspapers where the registered office of the company is situated. One. Secondly, publication has to be done in two newspapers, one in local language, which is vernacular language, and one in English language. And these newspapers has to be such which has maximum circulation, right? And if there are certain shareholders who do not agree to these changes, they should be given an exit offer. What are the guidelines for the exit offers? The guidelines or the regulations have to be laid down by the SEBI in this behalf. Is that clear? So now let us look at the Rule 7. So Rule 7 lays down certain procedural requirements for variation in terms of contract or the object. So let us first have a bare reading of the provision, and then I will explain it to you. So, according to Subrule 1, where the company has raised money from public through prospectus and has any unutilized amount out of the money so raised, it shall not vary the terms of the contract referred to in prospectus or object for which the prospectus was issued, except by passing a special resolution through postal ballot, and the notice of the proposed resolution shall contain the following particulars. So the notice that is to be released for special resolution, it needs to have certain information. What is this information? First, what is the purpose or object of the clause? What was the original purpose or object of the issue? For which purpose the issue was, the object was issued? The total money that was raised under that prospectus, the money utilized for the objects of the company stated in the prospectus. So if you had raised 60 lakh rupees, what money you have utilized and for what purpose that was stated in the prospectus. The extent of achievement of proposed object, right? So let's say the object for raising money was setting up a new manufacturing plant of chocolate cookies in Nasik. So setting up of a manufacturing plant is not something you went to the market, you bought a manufacturing plant and you kept it. No, there is a procedure for that. You have to take up certain clearances, you need land, you need machinery, you need electricity clearance, you need permission from the authorities. So the purpose for which the money was raised, what is the extent of achievement, how far you have completed the objective, that is to be specified. And what is the amount that has been left behind, what is the unutilized amount through that prospectus, and the particulars of the proposed variation in the terms of contract referred to in the prospectus or object for which prospectus was issued. Now, a lot of you, after reading this, might be correlating it to alteration of object clause. So guys, please understand, here we are not talking about memorandum of association. The procedure is a bit similar in terms of publication of notice, passing a special resolution, and giving an exit opportunity to the dissenting shareholder. But there we were talking about the object clause of memorandum of association. Here we are talking about the object clause of prospectus, the prospectus which is issued to the public before raising money. So here we are not talking about the memorandum of association. So alteration of object clause of memorandum of association is different from alteration in the object of prospectus. Is this clear? Guys, is this clear? So when you read the provision in the rule, the basic method of alteration by passing resolution, giving an exit, making a publication in the newspaper and giving an exiting opportunity to the shareholder is similar, but there we were talking about alteration of the object clause of the memorandum of association. Here we are talking about alteration of the object or the variation in terms of contract of the prospectus. This chapter is only about prospectus and allotment of securities, right? So there are few more requirements. Then whenever a company wants to alter the terms of contract or object, they will also have to give the reason and justification for seeking variation. So they will have to communicate it to the people who invested their money, that why do they want to alter the object of their prospectus, what is the reason for it, and what benefit it will bring to the people who have invested their money in the company through that prospectus. The proposed time limit within which the proposed varied object would be achieved. So this variation in the object that you're doing, how long will it take for you to achieve that, right? The clause-wise detailed as was required with respect to the originally proposed object of the issue, the risk factor pertaining to the new object, and any other relevant information which is necessary for the members to take an informed decision on the proposed resolution. So if you look at the language here, you will always understand whenever an information is to be communicated to the public at large, which can affect their decision making, the law has always included this language where it says that any other relevant information which is necessary for the members to take an informed decision on the proposed resolution has to be included. Right? Are we good here? Okay, one of the students is saying, ma'am, can you please give notes in advance so that we can get a printout so that while session we can highlight? Pick out your study material, you will find everything what's written here and you can highlight it. It's the same. So Mustafa is saying that variation in object in prospect requires special resolution, but in Rule 7, there is special resolution through postal ballot. So guys, I think you are still not able to correlate and read section and the rule together. So whenever you read the law, you read the Bare Act with the rules. So Bare Act gives the broad outline, rules gives the specifications. So section is saying that special resolution is passed, but the rule has specified that the resolution has to be passed through postal ballot. So the guidelines that are laid by the rule will have to be followed. Niti, you are absolutely right. The object which is written in the object clause of the prospectus is the purpose, the agenda for which the prospectus is issued. So you need to understand here, as I told you in the previous classes also, that a company is incorporated, it is doing its business. But there are situations during the business where they need more money for expansion, for setting up new factory, for opening new offices, for acquiring a new company or similar company. So you would have seen in the startup culture also, let's say when this all e-commerce platform started on a boom, there was Flipkart also, there was Myntra, there was Jabong, right? So eventually what happened? Myntra and Jabong was acquired by Flipkart, right? So what's happening here? A company is expanding itself and acquiring other similar companies. So it would need money for that. So as a company, when you need money, as a public company, when you need money, one of the ways of raising money is through an offer of securities, public offer. So when you make a public offer, be it an initial public offer or a further public offer, you have to issue the prospectus. Prospectus will include the information on why you need this money, what is the purpose of raising this money, how this money will be utilized, because till you understand that, you do not know whether the money that you're putting in will give you returns or loss. So let's say currently Britannia has 5 factories, right? And you see that there is an increased demand for Britannia biscuits in the market. And whenever you go to the shelves, there's always a shortage of Britannia biscuit. There's always a shortage of availability, or there's a shortage of the products. So if Britannia decides that because there is a high demand for its good, it should set up one more factory, right? the production. If it wants to increase the production, either it will have to expand the existing factory and install more machineries, or it can set up a new factory, right? So supposedly Britannia decides that it will set up one more factory for a specific line of biscuits, which is being liked by the consumers at large. So, and Britannia thinks that for that it would need more money, and he makes a public offer for selling of its securities. So, as a consumer, as a public, right, you invest money in shares because you are expecting returns. You are not doing a donation. कोई धर्म का काम नहीं हो रहा है यहाँ पे. You buy shares because you know that 10 rupees that you have invested today will give you 15 rupees 1 year down the line. This is why you are putting your money in the business. You know that the money that you will give to the company, that money will be utilized by the company to make the profit, and that profit will be shared with you, or that profit will lead to an increased valuation through which you can make money, right? So to be able to make that informed decision, you need to understand the purpose for which your money will be used. What is the agenda? How much money the company is asking for, and what is the purpose for which the company will be using that money, right? So only then you can make an informed decision. So the object clause of the prospectus will contain this information. So it just not contains the object, it also contains the financial information. So the content of prospectus is something that I've already discussed in the previous classes, right? So, so let's say a prospectus was issued for setting up a factory of let's say 4,000 square feet factory, which will have automated plants, right? So the automated plants for manufacturing, for packaging, for labeling, for everything, there will be automatic plant. Okay. So this was mentioned in the prospectus, right? But later on, the company realizes that it is not just the factory that it would require, it also requires to have a warehouse for storing the biscuits or the cookies that will be manufactured in that factory, and it would need a logistic mechanism. So there it would want to modify the object in prospectus. So there can be various situations where a company would need or require to modify its object in the prospectus of the company. Okay. So the sub-rule 2 of Rule 7 says the advertisement of the notice for getting the resolution passed for varying the terms of any contract that is referred to in prospectus or altering the objects for which the prospect was issued shall be in form PAS1, and such advertisement shall be published simultaneously with dispatch of postal ballot notices to shareholder. So when you dispatch the notice of postal ballot to the shareholder for passing special resolution, parallelly you advertise the notice in form PAS1 in the newspaper. So how you understand that? That advertisement in the newspaper has to be made in form PAS1 simultaneous to the dispatch of postal ballot notices to shareholders. I'm really sorry for this tongue twisting. What was your query, Rohit? And another requirement is that the notice that is being issued to the shareholders and which is being published in the newspapers, the same notice has to be placed on the website of the company as well. So wherever you will read about the requirement for advertisement of notice, everywhere you will see that there is a publication in newspaper and the notice has to be placed on the website of the company as well. When the notice for AGM are also sent, there also you will see the requirement. There is a requirement for placing the notice on the website of the company, right? So the next thing that we talk about, the exit offer to the descending shareholders. So the descending shareholders who have not agreed to the proposal, they will be allowed to exit the company as per the guidelines that are raised by SEBI. So this I had already told you. So this was about Rule 7. So what all points we read in Rule 7? The first point we did was where the company has raised money from public through prospectus and has unutilized amount out of the money, it shall not vary the terms of the contract or the object of the prospectus except by special resolution through postal ballot. So if it wants to do the alteration, it can be done by special resolution through postal ballot, right? Now, the notice that is to be given, it is to be sent to the shareholders along with the postal ballot notice and the advertisement in the newspapers and publication of the notice on the website as well. What was the content that has to be included? That we have already discussed on what information that will go in the notice that is being released for this purpose. So now coming to the next topic, which is types of prospectus. So there are different kinds of prospectus that you will get to see in the provided for in the Companies Act. So there is a deemed prospectus, shelf prospectus, red herring prospectus, and abridged prospectus, right? So when you look at these names, deemed, red herring, abridged, prospect, and shelf, do you get some idea, or does it connect to you in some way? Maybe the term red herring prospectus will not, but shelf, deemed, and abridged will definitely will put some information in your mind, some meaning that you can assign to it. Can anybody tell me what do they understand when they hear these words like shelf, red herring, and deemed? As such, guys, do you understand the meaning of deemed? What is the meaning of deemed? I'm waiting for the answers. Deemed means considered to be or assumed to be, right? So deemed prospectus, when we will read in detail, you will get to know there will be certain kind of documentation. Because of the information that is contained within it, it will be considered to be a prospectus. This is called deemed prospectus, right? Then when you look at the shelf prospectus, what do you understand? So I'm just explaining this to you in very, very layman terms. We will take up the detailed provisions and the definition that has been given in the law and the requirements that are provided for. But let us understand the basics on the surface, what you get to understand when you look at these words. The next term that you hear here is shelf prospectus. So let us associate with shelf life of food products, right? So the food products that we buy from the market, be it vegetable, be it fruits, be it packaged food, everything has a shelf life, right? There is a limited period within which it can be consumed. After that, it becomes stale. So similar concept is applicable to shelf prospectus as well, right? So just the way food items that we buy or eat from the supermarket has a shelf life, similarly, the prospectus, which is a shelf prospectus, has a shelf life. It has a duration for which it is deemed to be active and can be used repeatedly, right? The third kind of prospectus is the red herring prospectus. Now, red herring prospectus, what do you mean when you hear the word red herring? Okay, red as such is a color of danger a lot of times, but you can also consider it as a flagged prospectus in the sense that it is a prospectus in which the particulars of the quantum of the price is not included in detail. So the complete details of the quantum of price is not included. So red herring prospectus is a flag prospectus which has certain information that are missing, right? And then there is a abridged prospectus, which is a shortened or summarized prospectus. Okay. Now we will take up each of these prospectus in detail. Now coming to the first concept, which is deemed prospectus. So the provisions for deemed prospectus is given under Section 25 of the Companies Act 2013. Now let's go through Section 25. So let us first read the bare provision and then I'll explain it to you in detail. According to Section 25, where a company allots or agrees to allot any security of the company with a view to all or any of those securities being offered for sale to the public, any document by which the offer for sale to public is made shall for all purposes be deemed to be a prospectus issued by the company. So any documentation through which a company makes an offer for sale of its securities, that document will be deemed to be a prospectus. And when you are deemed to be a prospectus, you will have to fulfill the requirements of the prospectus as per the law. Now, why do we have such provisions? These provisions are there to prevent cheating, to ensure that the people who invest their money in the securities of the company are not duped. Okay. Further section says, and all enactments and rule of law as to content of prospectus, liability in respect of misstatement and omission from prospectus, otherwise relating to prospectus shall apply with the modifications that are specified in subsection 3 and 4 shall have effect accordingly, as if the securities had been offered to the public for subscription, as if persons accepting the offer in respect of any securities were subscribers for those securities, but without prejudice to the liability, if any, of the person by whom the offer is made in respect of misstatement contained in the document. So for wherever the company makes an offer for sale of securities, the document through which that offer is made, it will be deemed to be a prospectus. It will have to comply with the requirements for and the liability and the contents of prospectus, plus the liability of the person who has made the offer for sale in case of misstatement will also stand as such. So when we look at section 2, it will subsection 2, it says, for the purpose of Companies Act 2013, it shall, unless the contrary is proved, be evidence that an allotment of or agreement to allot securities was made with a view to securities being offered for sale to the public, if it is shown that an offer of the securities or for sale to the public was made within 6 months after the allotment or agreement to allot. So this situation where we are talking about, where there is a agreement for allotting the shares of a company to Mr. A, and Mr. A within 6 months offers that security for sale, right? Within 6 months, that person sells of that security. It makes an offer for the sale of those securities. Then it will be assumed that securities were offered to Mr. A for sale to the public only. So he is just an intermediary, and the securities were offered for sale to the public. So we are just trying to safeguard the public here, that at the date when the offer was made, the whole consideration to be received by the company in respect of the securities had not been received by it. So if this two requirements, the requirement of 6 months and the entire money not being received, is fulfilled, it will be deemed that the securities were offered for sale to the public. Are we clear on this? Guys, are we clear on deemed prospectus? Say yes or no. So basically, if you pay attention to this, if you pay attention to this provision, you will see that it is trying to safeguard. It is trying to safeguard people in situation where company does not directly sell the security. It firstly allots the security to the middleman, who further sells it off to the public. So this provision says where it is shown that an agreement to allot the security was made with a view to the securities being offered to the sale to the public, if it can be proved that offer of the securities was made and it was made public within 6 months after allotment or agreement to allot, and the entire money that is supposed to be received on the securities by the company was not received by the company, right? In that case, it will be deemed to be a prospectus. Okay, some students are asking me, ma'am, where is deemed prospectus in the study material? I'll tell you the page number. Just 1 minute. So as such, when you look at your study material, it does not give the heading deemed prospectus, but section 25, if you look at, it is important for you to understand section 5, because there are certain requirements that have been provided here, and it is good to know that. Okay, I'll just confirm if it is a part of your syllabus or not. I think it is still a part of it. Yes. So if you look at page number 3.17, you will find deemed prospectus. Some students were unable to find it. So page number 3.17, you will find the deemed prospectus. Shashidhar is asking me, ma'am, what is the difference between regular prospectus and deemed prospectus? Regular prospectus is a document which is issued as a prospectus to the public when they are offering their securities for sale, right? But deemed prospectus, here we are saying that a document is issued which is not being called as a prospectus. A document is issued for offering for the sale of securities, but it is not being called as the prospectus. So any notice, any document through which an offer is made to the public for the sale of securities, it will be considered to be a prospectus, and the requirements of law have to be fulfilled. Whether it is being called as a prospectus or not, it is being called as a notice, but if it is a document through which offer for sale of securities is made to the public, it will be deemed to be the prospectus. The second point says where there is an agreement for allotment or the securities is allotted to the person, and this person, right? So I am company ABC Limited. I did not make a public offer for the sale of my securities. What I did, I entered into an agreement to allot 100 shares, let's say 100 shares of my company to Mr. A, right? I have made an allotment. And this Mr. A the 100 shares that were allotted to him within 6 months of allotment or agreement to allot offers that 100 shares for sale to the public, right? So makes an offer for sale to the public along or the money. So when a company allots a share, it is supposed to receive the money on that share. So if the money for that number, for those 100 shares were not received by the company, then also it will be deemed that the securities were offered for sale to the public, not to an individual, but to the public. So here also it will be treated as a deemed prospectus. So if you look at this that I have made here, point is, has the allottee sold shares to public within 6 months? Yes, deemed prospectus. Has the allottee sold shares to public within 6 months? No. But if the allottee paid full consideration to company before offer for sale to the public, it will not be deemed a prospectus. But if it has not paid, it will be deemed as prospectus. So a lot of time companies, in order to overcome the burden of formalities that comes with offering of securities for sale to the public, they take this route and they take a middleman in between. So wherever, if such a kind of action or procedure comes into the notice, it will be deemed that the offer for sale of securities to the public was made. Aisha, Abridged prospectus is not there in detail, but still I will let you know the basic. It is good to know certain basics. We will see what we can do in this class. Now, what is the effect of deemed prospectus? What happens when a document is deemed to be the prospectus? So a document through which a sale of security, an offer for sale of security was made, when that document is deemed to be the prospectus, what happens? What is the effect of that? So whenever such a deeming provision happens, it will lead to all enactments and rule of law as to the contents of prospectus shall apply. So whatever rules and regulation and the requirement that we studied for the contents of prospectus, that will be applicable to deemed prospectus as well. All enactments and rule of law as to liability in respect of misstatement. So this term here is coming again and again, liability in respect of misstatement. So when we will read section 34 and 35, you will get to see that there is civil and criminal liability affixed to people if there are misstatement in the prospectus and which leads to defrauding of the public. So it is talking about that liability. So all enactment and rule of law as to liability in respect of misstatement, that is section 34 and 35, in an omission from prospectus or otherwise relating to prospectus shall apply. So whatever liability is affixed on a company for issuing misstatement in prospect or omitting information, the same liability be affixed in the case of deemed prospectus as well. It shall be deemed that the person by whom the offer to the public is made were named in the prospectus as the directors of the company. So that ways the onus will come on that person also who makes an offer to the public. So what you see largely here, that there is no dilution of the liability for the persons who make an offer, which is in addition to the liability of company whose securities are offered for sale. So not just the company is liable, but even the middleman who makes the offer for sale of security to the public, even he becomes liable through this deemed prospectus. Amir, I never said that section 25 is not in the syllabus. Section 25 is there in syllabus. Section 33, 24, 30, 38, and 41. Right? 25 is very much a part of your syllabus. Section 24 I have not taken as such. And section 30 was a very tiny section, which I thought you should know. So in the first class only, I told you that So please do not get confused. I mentioned section number 24, 30, 33, 38, and 41. I never said section 25. And whenever there is any confusion pertaining to whether a section is applicable or not, it might happen that inadvertently or by mistake, I quote a wrong section. Always refer to your study material. Your study material for May 2021 examination is updated till date, and it is what you need to follow. So every section that is given there, that needs to be done. Varun is asking me, ma'am, after alteration of object clause, if company makes issue for new object, will it be IPO? After alteration of object clause, if company makes issue for new object. Varun, your basic fundamental is wrong. I couldn't understand your question. I'm sorry. Kindly reframe your question that explains your query. Right? Are you clear with this? Okay. Coming to the next topic. So, what all should be the content of deemed prospectus? So, all the content that are required to be present in a prospectus should also be there in the deemed prospectus. Other than that, the net amount of the consideration that is received or to be received by the company in respect of the securities to which the offer relates, and the time and place at which the contract where under the said securities have been or to be allotted may be inspected. So it not just contains the information which are specified in the prospectus, it will also contain the net amount of the consideration that was received or to be received by the company in respect of the securities, and the time and place at which the contract were allotted, and time and place where that contract under which the securities were allotted can be inspected, right? Now, this prospectus, this deemed prospectus needs to be signed. So, if the offer for sale to the public is made by a company or a firm, the prospectus will have to be signed by two directors if the offer for sale is made by company. But if the offer of sale is made by a firm, it will be signed by at least one half of the firm, right? So here, before proceeding further, we can take a 2-minute break. A lot of students are requesting me, and we will come back in 2 minutes. Okay. Okay, the break time is over, people. Welcome back. Too much of break is not good. You lose the flow of the lecture. I give break only because a lot of students keep on putting a ping, ma'am, please 2 minutes break, please 2 minutes break. Okay, so is everybody good with the concept of deemed prospectus? So I think some of you are still getting confused. Let me reiterate. A deemed prospectus is nothing but a document which is considered to be a prospectus. So the law says when an offer for sale of securities to the public is made through a document, so that document is not being called as a prospectus. So what the company has done, let's say there is a ABC Limited company, it made an offer to the sale to the public by just issuing a notice. It didn't call that notice to be the prospectus. In that case, that notice will be deemed to be a prospectus. And because it will be deemed to be the prospectus, the requirements of law that are applicable on a prospectus, the liabilities that are affixed for misstatement in prospectus will be applicable. Is that clear now, Shashidhar? Was I able to clear your doubt? Perfect. I am assuming that I was able to clear your query. Okay, perfect. Now coming to the shelf prospectus. So I already told you that shelf prospectus is a prospectus with a shelf life. Now, please mark this as important. You get to see a lot of questions on shelf prospectus in exam. Even in November 2018, even in 2019 also, 2020 also there were questions on shelf prospectus. So shelf prospectus is something where you can always get to see the questions. So very, very important topic. Okay. For the students who have not received their modules, you don't need to panic, guys. Go to the ICAI BOS knowledge portal. On the BS knowledge portal, select intermediate. From the intermediate, go to paper 2 corporate and paper 2 corporate and other laws. From there, select study material applicable for May 2021 examination and download it. Even if you have not received your hardbound modules, you can download it. It has been uploaded on the ICAI BOS knowledge portal. Guys, is it clear? None of you could hear me. One of the students has mentioned that he cannot hear me. People, could you hear me? Okay. So now coming to the definition of shelf prospectus. So shelf prospectus means a prospectus in respect of which the securities or class of securities included therein are issued for subscription in one or more issues over a certain period without the issue of a further prospectus. The only caveat is to supplement the shelf prospectus by an information memorandum. Now, what's happening here? Let's say a company wants to issue 100 number of a class of securities. So there is a specific class of securities that it wants to issue and 100 in number, right? So, but there's a catch here. The company does not want to offer for sale all or the entire 100 number. It wants to break it down in small chunks and then offer it for sale, right? So here what a company can do, company can have a prospectus which will have a shelf life, so which will be valid for a period of 1 year. So it will contain all the information there, and next time, let's say it broke the securities that it wants to offer in 5 parts, so 20 at a time. So with first time it issued the prospectus, which will be called as the shelf prospectus, and it released 20 securities. 3 months down the line, they want to release 20 more securities. So then what they will do, the shelf prospectus that was issued on the first time will be good. It will supplement it with a information memorandum. Information memorandum is nothing but the additional or the new information that the person who is investing in the money in the company needs to know. So the basics remain the same. The amendments or the new information comes into picture. Just the way the ICAI releases the RTP. So your study material is the base document. If there are certain new amendments that you need to study for your examination perspective, that is released in the form of information memorandum. So the study material that you get, that also has a shelf life. So similarly, the prospectus has a shelf life for a period of 1 year, and securities or a particular class of securities can be issued multiple times through that same prospectus. So every time the company need not draft a prospectus, they can have a shelf prospectus, which will be a bulky documentation supplemented with a information memorandum, which will contain the key updates or changes. This is what is meant by a shelf prospectus. Is that clear? So as such, this section 31 that we talk about, it is applicable to any class or classes of company as SEBI may provide by regulation in this behalf. So to whom or which class or class of company will have to comply with section 31, that is prescribed by the SEBI. So whatever the prescription is by the SEBI, such class or classes of company will have to file the shelf prospectus with the registrar at the stage of first offer of securities included therein, which shall indicate a period not exceeding 1 year as the period of validity of such prospectus, which shall commence from the date of opening of the first offer of securities under that prospectus, right? So what the section is saying here, that if a company which is required to have a shelf prospectus, which can have a shelf prospectus as per regulations led by SEBI, they will have to file the shelf prospectus with the registrar. So any class or class of companies which is as prescribed by SEBI, they have to file a shelf prospectus with the registrar. When is this shelf prospectus needs to be filed? This shelf prospectus has to be filed at the stage of first offer of securities, right? Plus, this shelf prospectus has to come with a validity, and the validity of the shelf prospectus should not be more than 1 year. Can it be less than 1 year? Yes, it can be less than 1 year also. It can be 6 months also. It can be 3 months also, but it cannot be more than 1 year. From where the period of 1 year will commence? So the period of 1 year or the period of validity that we are talking about, it will commence from the date of opening of the first offer of securities under the shelf prospectus. So the date which is the opening of the first offer of securities, the date on which the opening is done for the first offer, right? That will be the date for determining the validity of the shelf prospectus. So this was about the first offer. So if the company uses the same shelf prospectus for a subsequent offer, then in that case, we don't need a further prospectus. That same prospectus will be issued. It will just be supplemented by the information memorandum. But the only thing that we need to ensure that the shelf prospectus need to be valid at that point. So if the shelf prospectus is valid, no further prospectus is needed for further offer. Is this clear? Bhavya, regarding your query, what is written at the backside of the prospectus, you can revisit the lecture that I had done yesterday. You will be able to understand. I don't think I need to repeat it here. Now comes filing of information memorandum with the shelf prospectus. So for the first time issue, shelf prospectus is enough, right? But whenever a company is making a subsequent offer, so before it makes the second or subsequent offer of securities under the shelf prospectus, he will be required to file the information memorandum with the registrar. And this information memorandum has to be filed with the registrar within the time that has been prescribed. Now the question arises, what are the information that need to be provided in the information memorandum? So there are certain material facts that have to be included, like if there were any new charges created, if there were any changes in the financial position of the company as between the first offer and this new offer, or if there are any other changes which might affect the decision making of the subscriber to the security. So this information memorandum, which contains these following facts, have to be submitted to the registrar before the subsequent offer of the securities. Now, further, if you look at here, there is a requirement which says that there is a requirement of intimating the changes and providing an opportunity to withdraw an application to the person who has received the application for the allotment of securities with advance payment before the information was released. So if you look at the proviso to the section 31, subsection 2 of section 31, it says, it is provided that where a company or any other person has received application for the allotment of security along with advance payment of subscription, before the making of any such change, the company or the other person shall intimate the change to such applicant, and if they express a desire to withdraw their application, the company or other person shall refund all the money received as subscription within 15 days. So the point here is that the company received the application before any changes pertaining to charge created or financial information, before any of that change occurred, the company has already received the application with her advance payment. In that case, it is the duty, it is the obligation of the company to inform those changes to the applicant. And if the applicant wants, he can withdraw the application and the company will have to refund the money. So supposedly, you are buying laptop from Amazon, right? So let's say the laptop that you are seeing, it comes with i7 processor, right? Now, some recent amendment, some recent upgradation of technology happens, and now that particular model of laptop that is being sold by X company, it's coming with the i8 processor instead of i7 processor. Now, in this case, there is a change in the construction of the product that you want to buy. So here, as per the requirements that you see, the company should intimate the applicant where you have already booked your goods that so and so change in the product has happened and whether you want to buy it or not, right? So are you getting the concept here for intimating the changes and opportunity to withdraw to an applicant? Guys, are you clear on this? Now, let us look at the Rule 10, which is applicable for shelf prospectus. So Rule 10 says the information that is to be submitted by the company, it will be prepared in form PAS2, and it will be filed with the registrar along with the fees that has been prescribed within 1 month prior to the issue of a subsequent offer of securities under the shelf prospectus. So this IF has to be filed within 1 month prior to the issue of second or subsequent offer of securities, right? Now, this memorandum along with the shelf prospectus is deemed to be a prospectus, and because it is again deemed to be a prospectus, it will have to fulfill all the requirement, and this has to be filed every time an offer of securities is made or every time there is a subsequent offer. The memorandum together with the shelf prospectus is deemed to be the prospectus. So in the case of first offer, it is the shelf prospectus only which is deemed to be a prospectus. In the case of subsequent offer, the shelf prospectus along with the memorandum is deemed to be a prospectus. Is that clear? So Varun, your query is, should the first offer be made within 90 days after a copy sent to a registrar? Yes, because shelf prospectus is also a type of prospectus, right? So the requirements that are there for a prospectus has to be complied with in the case of shelf prospectus as well. The only exception is that it remains valid for a period of 1 year. That is the only requirement. So the requirement pertaining to publishing the requirement pertaining to making the publishing the prospectus within 90 days of getting it registered with the registrar is still applicable. Ma'am, Srishti is asking me, ma'am, information memorandum has to be published in 2 newspapers. No, dear, there is no such requirement. Madam, general prospectus validity or expiry will not be there. Vishnu, there is an exception here. Shelf prospectus will come with a prescribed shelf life. So the validity of the shelf prospectus will be as per the validity that is mentioned in the prospectus. But for any other requirement or compliance that needs to be there for the prospectus has to be followed for the shelf prospectus as well. Shashidhar is asking me, ma'am, can they change the objective through information memorandum in the subsequent issue? Well, if you look at information memorandum and the information that is to be given there, the objective really does not change. The information memorandum contains the information in the current position of the company, current financial and other health of the company, right? So whenever there is a change in object or in terms of contract, again, the procedure pertaining to special resolution through postal ballot, that has to be followed, right? So information memorandum can never be a tool of amending the shelf prospectus. Information memorandum is an additional information pertaining to the company. The changes that has happened in the company over a period of 2 months or 3 months or 6 months, the good or the bad, any changes that has happened that can affect the decisions of an investor, that information goes into the information memorandum. Is that clear? Withdrawal of advance subscription. Manoj is asking me, ma'am, withdrawal of advance subscription, is it applicable in normal prospectus also? No, this is applicable for shelf prospectus only, because here the right of withdrawal is given when there is a change in it. In case of prospectus, I don't think, I have not seen where a withdrawal option is given in case of, but in case of regular prospectus also withdrawal option is given when there is an amendment in the prospectus. So if there is an amendment in terms of contract or the object clause and object clauses of the prospectus, in that case also the descending shareholders are given a right to exit. So do not mix the two concepts. No. Shelf prospectus is different and deemed prospectus is different. Shelf prospectus is a prospectus which comes with a shelf life, and that prospectus also has to comply with the rules and regulations that are prescribed under the law, right? So when you look at, okay, one of the student, Amrisha, wants me to repeat the rule 10. So rule 10 of the prospectus and allotment of security rule says that this information memorandum that we are talking about, there is a prescribed form for filing the information memorandum. So I know as students, you would have never had an opportunity to visit the MCA website and see the different forms that are issued by the MCA. So this form, which is required to be filed for information memorandum, is form number PS2, right? So it's just like any other form which has headings and a certain requirement for filling in the information, right? So the form which needs to be filed is form number PAS2. This form has to be accompanied with the fees. Now this form and the fees has to be submitted 1 month before the issue of subsequent offer of securities. So when a company thinks that he wants to make a subsequent offer of security, 1 month before, it will have to file the form PAS2, which is the information memorandum, to the registrar. Is this clear, Amrisha? Nidhi, shelf prospectus is a type of prospectus. It is not a type of deemed prospectus. And wherever you get to see this language deemed prospectus, it automatically comes into picture that the rules and the regulations that are implied on the prospectus will be applicable to it also. So shelf prospectus is, when I say that shelf prospectus will be deemed to be a prospectus, it means shelf prospectus will also be treated like any other prospectus, with the exception that it comes with a validity and the requirement of filing of information. So shelf prospectus is also a prospectus which need to fulfill the requirements of a prospectus. The only exception being that it comes with a shelf life, and because it comes with a shelf life, it has to be supplemented with the information memorandum at every subsequent offer. So if you look here, when you look at this line that I say, that memorandum together with the shelf prospectus shall be deemed to be a prospectus. Why? See, you need to understand lawmakers are very specific and clear with what they are saying, and they try to cover up loopholes. So this information has been added so that the companies do not exit their liability. So information memorandum, when it is released by the company at the time of subsequent offer, in that also, if they make a misstatement, right? If there is a misstatement in the information memorandum, the company cannot do away with their liabilities. This is why the law here says that the memorandum along with the shelf prospectus will be deemed to be they together will be deemed to be a prospectus. So when you're treating information memorandum with the shelf prospectus as the prospectus, the liability that is there for misstatement, the liability that is there for defrauding the public, that will be fixed on the company. So basically the lawmakers have fixed the loopholes that could be there and is preventing people from escaping their liabilities. Is that clear? Guys, are we good with shelf prospectus? Himanshu, yes, I understand you are from final course. I am receiving your queries, but I do not know how do I help you if your chats you are not, Miss Achal ma'am is not able to receive. I think you will have to reach out to the IT team of ICAI. I might not be able to help you, but yes, I am able to receive your queries. Okay, now. Okay, I have received a question from Shashidhar. First issue of shelf prospectus is same as regular prospectus, except that the shelf prospectus will contain a validity period. So if you see the shelf prospectus will mention that they will indicate a period of validity. So just the way we mention the date on the prospectus, we mention a validity period also on the shelf prospectus. So are we clear on this, guys? Shall we proceed to red herring prospectus? Okay, now let's start with red herring prospectus. So the concept of red herring prospectus is provided in Section 32 of the Companies Act 2013. Now, the red herring prospectus is a prospectus which does not include complete details of the quantum or price of the securities that are included therein. So that means there is a scope of modulation of the quantum of prices, right? So it is in a way incomplete or the first primary prospectus, right? So this prospectus is issued before a prospectus, right? So this is like a pre-document. So a company who is proposing to make an offer of securities can issue a red herring prospectus prior to issuing a prospectus. So it is like a pre-documentation, pre-information, just the way you have a teaser before a movie. This is a teaser for the prospectus, right? Is that clear now? Now, a company which is proposing to issue a red herring prospectus, it will have to file the red herring prospectus with the registrar at least 3 days prior to the opening of subscription list and the offer. So yes, even the red herring prospectus needs to be filed with the registrar. When it needs to be filed? It needs to be filed 3 days prior to the opening of subscription list and the offer, right? And the red herring prospectus also carries the same obligation that a prospectus has. Okay, so if there is a misstatement in the red herring prospectus, the liabilities will be there. And after the issue of red herring prospectus, when the company issues the final prospectus, they will have to highlight the differences or the variations between the red herring and the final prospectus. Right? Is that clear? Are you able to understand this? So there are certain requirements that need to be fulfilled for a red herring prospectus. So the red herring prospectus shall state the total capital raised, whether by way of debt capital or share capital, what is the closing price of the securities, and any other details as were not included in red herring prospectus. So when the final prospectus is issued after the red herring prospectus, these information have to be included. What are these information? First is the total capital that was raised by way of debt or share capital, the closing price of the securities, and the details that were not included in the red herring prospectus. Right? Is that clear? And when the offer of security is closed, this prospectus is filed with the registrar and SEBI both. So when the company releases the red herring prospectus, it files the red herring prospectus with the registrar. After the red herring prospectus, when the company issues the final prospectus, after the closing of securities, the final prospectus will be filed with the registrar and SEBI both, and the final prospectus will state the total capital that was raised by way of debt or share capital, the closing price of the securities, and any other detail that was not included in the red herring prospectus. Is that clear? Guys, are we clear on this? Okay. I will revise or repeat the red herring prospectus for students. Some of them have not been able to understand. So let's say you have gone to see Mission Impossible, right? During Mission Impossible, you see the trailer for Doctor Strange. So the trailer of Doctor Strange is not the full movie. It just is the highlight. Similarly, where a company is proposing or to make an offer of securities, it can issue a red herring prospectus prior to the issue of prospectus. So it is an incomplete document which does not contain complete information of the quantum or price of securities that are included there, right? How many shares the company is going to offer, what will be the price of the securities, that information is not given in detail or not fully available, right? So such a prospectus is known as the red herring prospectus. Now, the company who is proposing to issue a red herring prospectus, they will have to file this prospectus with the registrar 3 days prior to the opening of subscription list and offer. So before it releases the offer to the public, before it opens the subscription list, the red herring prospectus has to be filed with the registrar. So, and this red herring prospectus that is issued, that will also carry the same obligations that are associated with the prospectus. So if the company makes any misstatement, if the information is complete, if there is an intention to defraud, the liabilities will be the same, right? So when after the red herring prospectus, the company issues the final prospectus, after the closing of the offer, that final prospectus will be filed with the registrar and SEBI both. And this final prospectus will highlight, will specify the differences between the red herring prospectus and the final prospectus, and it will also state certain information. What are those information? What was the total capital raised through red herring prospectus, whether that was a debt capital or a equity share or a share capital? What was the closing price of the securities? Because we know complete particulars about the quantum of securities, and the price of the securities is not mentioned. So whatever was the closing price of the securities, that is to be mentioned, and any other details that were not included in the red herring prospectus. So the red herring prospectus is only incomplete in pertainance to the quantum or the price of the securities. Rest all information that are to be included in the prospectus are included. So only the quantum and the price of securities is not confirmed. And this prospectus also needs to be filed with the registrar 3 days prior to the opening of subscription list and the offer. Is that clear? Is that clear, guys? Yes, Shashidhar, the final prospectus will be issued after the closing of offer under the red herring prospectus. And this, sorry, I quoted it wrongly. What happens here, when the closing of the offer of securities, the prospectus which follows the red herring prospectus, it needs to be filed with the registrar and SEBI. And that prospectus will contain the information pertaining to the total share capital that was raised by a debt or small share capital, and the closing price of the securities. So the filing with the registrar of this prospectus has to be done after the closing of the offer. Is that clear, Shashidhar? Okay. Now coming to the abridged prospectus. Okay. So as such, abridged prospectus is not included in your syllabus, but the definition was a part of your definition clause. So I'll briefly tell you about it. However, before I go into abridged prospectus, I've received a query. The student is asking me, why do we issue a red herring prospectus? So basically, this red herring prospectus is nothing but a source of information regarding a potential offering that is being crafted by a company. So basically what happens here, that when the company is planning of making offer for sale of securities, it issues a red herring prospectus. So the public at large gets to know that what is going to happen in the company. It basically creates a buzz also, right? The only information that it does not has the details of the price or the number of shares that are being offered. Yes, the shares will be offered. What will be the purpose for offering this share? What is the objective? Why is company issue this shares? All those information will be there, except the quantum and the price. So basically that helps the public at large to know what's happening in the company, and also the company gets to get an idea of the sentiment of the public as well. So if you take this example that where your mom gets your phone bill and you are over limit. So it's a postpaid phone where you have exceeded the limit that has been provided to her. So you begin talking to her about how difficult your maths class was and how well you did in the test. So basically what you are doing is you are making your mother aware of the situation. So here also through red herring prospectus, the public is being made aware of the company status, what company is planning to do, and what is the current health of the company, how well it is doing, how good profit it's making, what is the growth chart of the company. All these kind of information is there. So this is the reason why a red herring prospectus is issued by the company. Is that clear, guys? Srishti is asking me, ma'am, this prospectus is issued to protect from compliance of minimum subscription requirement? No, dear, nothing like that, because ultimately the prospectus has to be issued by the company. It's nowhere regarding this. Niti, don't worry. If all the topics are not completed, I won't leave the topics like that. I will be taking an additional class to complete the chapter. These chapters are important and crucial, and sometimes it takes time to finish them up. So if I'm not able to finish it in this class, I will take another class on this. Don't worry. Aditya is asking me, ma'am, is it necessary for a company to have all the prospectus, or any one of them is enough, ma'am? It depends on the strategy of the company on how they want to proceed. These are the type of prospectus that we have available at hand under companies law. Okay. Now coming to the definition of abridged prospectus. So abridged prospectus means a memorandum containing such salient features of prospectus as may be specified by the SEBI and regulations made in this behalf. So abridged prospectus is nothing but a summarized form of prospectus which contains key information that has been prescribed by SEBI in this behalf, right? That is all what is meant by abridged prospectus. Now coming to the offer for sale, which is section 28 of the Companies Act. So section 28 provides for the offer for sale of securities. Now offer for sale of securities is little different from a IPO or a FPO. How is offer for sale different from a IPO or a FPO? In case of IPO or a FPO, fresh shares are rolled out by the company in the market for selling. But in case of offer for sale, and existing shares, which is currently maybe held by Mr. A, it is offered for sale to the public. So there are no fresh dilution. Fresh dilution of the shareholding is not happening. Only the existing share is being offered for sale. So IPO and FPO is differing from offer for sale. Every time there is a IPO or FPO, there is a dilution in the company. New shares are being rolled out by the company for sale, but so is not the case for offer for sale. So let us go through the provisions that is given here. So as such, when you look at section 28, it applies where in accordance with the provision of any law for the time being in force, certain members of a company propose to offer for sale to the public the shares held by them, right? So the people who are the current shareholders, they and are the members of the company, they are making an offer to sell their shares to the public. Is that clear? So IPO, FPO is different from OFS. So subsection 1 of section 28 says, where certain members of a company propose in consultation with the board of directors to offer. So here consultation of the board of directors is important. In accordance with the provision of any law for time being in force, whole or part of their shareholding to the public, they may do so in accordance with the procedure as may be prescribed. Is that clear? So here there is no fresh dilution happening, but it is only the internal movement of shares that is taking place, right? So do not confuse between the concept of IPO, FPO and OFS. Now, clause 2 says, now before I go further, can a private company make an offer for sale under section 28? Guys, can a private company make an offer for sale under section 28? No. It is only public company that can make an offer for sale. So here also the existing shareholders offer their shares for sale to the public. So OFS is a method of sale of shares which is available only to public company and not the private company. So never make that mistake. OFS cannot be made by a private company. Like recently, government is I think diluting 10% of his shareholding in sale. So they are selling their shares through OFS. It was a recent news that 10% dilution, government is offering 10% of its shareholding to public and it is available for sale, right? So in the offer for sale, there is no new shares that are being offered. A further dilution is not happening. An existing shareholder, an existing member of the company proposes to sell off whole or part of its share in consultation with the board of directors of that company. Now, let us look at the documents that are required for offer for sale. So any document by which the offer of sale to the public is made shall, for all the purposes deemed to be a prospectus issued by company, and all rules and regulation made thereunder as to the contents of prospectus and to the liability in respect of misstatement or omission shall apply. So here also, if there is a document through which an offer for sale is being made, the document through which that offer for sale is made, it will be treated as a prospectus, and the requirements pertaining to the contents of prospectus, liability for misstatements and omission will be applicable, right? Next section, subsection 3, talks about collective authorization and reimbursement of expenses. So if the offer of sale is being made by the company on behalf of the shareholder, the expenses that are incurred by the company in making that offer for sale, that has to be reimbursed to the company. So let us read the subsection 3. What does it say here? So subsection 3 says the members, whether individual or body corporate or both, whose shares are proposed to be offered to the public shall collectively authorize the company whose shares are offered for sale to take all action in respect of offer for sale on their behalf, and they shall reimburse the company all the expenses incurred by it on this method. So there are two requirements. One is the individual or the body corporate whose shares are to be offered for sale, they will authorize the company to sell their shares on their behalf, and they will reimburse the company for the expenses that are incurred by the company due to offer for sale, right? So along with the section 28, we also have to look at rule 8 of PS rule. So rule 8 talks about offer of sale of shares by certain members of the company. So the guiding provisions on that is provided under rule 8. Mohammed, I think you are confusing. Let's say there are offering for sale is different from transfer of shares. So let's say I am holding share and I want to transfer it to my father. That is a transfer of share. Offer of share is always a public trading of share. It has to be publicly available. When you do it to an individual, it is a transfer of share. Offer for sale is always publicly in nature. Okay. Vishal is asking me, ma'am, can it be done by any member which have 25% shares without consulting with other due to some dispute? Well, this has to be done in consultation with the board of directors. So these kind of things are governed by article of association. When you look at the articles of association, such situations where there is a dispute between the company and the member wants to sell its shares, how he can proceed, those requirements are governed by the articles of association. So we will have to look at the articles of association on how is it worded. Yes, Niti, you can say that. Matlab, in a way, the company is doing the procedural part. It is helping its member to sell its share. Now, coming back to the rule. Now, let us look at the rules that are being provided here. Guys, dhyan de lo. Okay. Now, when you look at Rule 8, subclause 1, it says the provisions of part 1 of chapter 3, namely prospectus and allotment of securities and rule made thereunder shall be applicable to an offer for sale referred to in section 28 except for the following. So all the rules and the provisions of part 1 that we have studied till now, they will be applicable for offer for sale also, like the requirements of prospectus, the procedure for issuing securities for public offer, all that requirement has to be fulfilled, except the provisions relating to minimum subscription, the provisions for minimum applicable value, and the provision requiring any statement to be made by the board of director in respect of utilization of money, and any other provision or information which cannot be complied or gathered by the offerer with detailed justification for not being able to comply with such provision. So the requirement of minimum subscription, minimum application value and statement by board of director in respect of utilization of money is not required in case of offer for sale. Also, if there is certain other information which cannot be compiled and which needs to be provided as per the requirements under part 1 of chapter 3, they can be done away by the offerer with a detailed justification. Now again, the language is such that it becomes subject to litigation. So if such a matter goes into litigation, it will be open to court to decide whether enough justification was given or not, or whether it was right on the behalf of the offerer to omit within information. Right? So let's look at Rule 8 subclause 2. It says the prospectus that is issued under section 28 shall disclose the name of the person or entity bearing the cost of making the offer of sale along with the reason. So whosoever is bearing with the entire expenditure, that person is that person's name is to be mentioned, right? So these are the two rules that are provided for offer for sale under Rule 8. Is that clear, guys? So what are the exceptions of compliances for offer for sale? One, the provision relating to minimum subscription, the provision relating to application value, the provision relating to statement by director regarding utilization of money, and certain other information which cannot be compiled or gathered by the offerer with detailed justifications. Right? Is that clear, guys? Are we good till here? The next topic that we take up is securities to be dealt at stock exchanges. The procedures and the guidelines for the same are provided under section 40 of the Act. So, how the securities have to be dealt at the recognized stock exchanges, how will the company trade its securities on the recognized stock exchanges, that procedure or guidelines have been provided under section 40 of the Companies Act. So if a company wants to trade its securities on a recognized stock exchange, and every company who is making a public offer will have to, before making such an offer, make an application to one or more recognized stock exchange or exchanges and obtain permission for the securities to be dealt with in stock exchange. So yes, till you get the permission from the recognized stock exchanges and you do not get listed, you are still an unlisted company. Is that clear? So whenever a company is making a public offer for securities, so before making such an offer, it will have to make an application to one or multiple stock exchanges and obtain their permission for the securities to be dealt with those stock exchanges. Is that clear? Now, the prospectus will state the name of the stock exchange in which the securities shall be dealt with. So when the company releases its prospectus, in the prospectus, it will have to mention the name of the stock exchange on which the securities of that company will be listed. Then the company has to maintain a separate bank account for keeping the application money that he receives, right? So all the money that he receives on application from the public for subscription to the securities has to be kept in a separate bank account maintained with a scheduled bank, and it has to be utilized only for the purposes that are specified. So it cannot be utilized for any purpose other than for adjustment against allotment of securities where the securities have been permitted, for the repayment of money within the time specified by the SEBI received for the applicants where the company is unable to allot securities. So this subscription money, the money that they receive from the public, they can be used only for adjustment when they are allotting the securities. So you need to understand, let's say company is allotting you the securities worth ₹10, but you do not pay entire ₹10 at the time of making application. You might have paid only ₹2 or 5, which is the minimum subscription value. So that money that is being paid at the time of at the initial application, that money can be used only for adjustment against allotment of securities, or it can be used for returning the money if the company is unable to allot the securities. So usually what happens, a lot of people make the application for getting the securities allotted to them, but not everybody gets the securities. So people who have given the money but have not received the securities due to some reasons, they will get their money back. Now, what are the timelines for returning the money, how it is to be done, that we will read about when we are talking about allotment of securities. Okay, then so if there are any conditions which provides that the compliance with the requirement of this section can be done away, that will be void. So let's say if there are any conditions which require or bind an applicant for securities to waive compliance with requirement of this section, will always be void. So if the terms of the conditions of the prospectus are such that it does away with the compliance under section 40, that requirement that is provided for will be void. So an applicant will always have their rights intact. What is the penalty if there is a default by the company in complying with the provisions of section 40? The company will be liable to a penalty of a minimum of 5 lakh rupees to a maximum of 50 lakh rupees. And the defaulting officer will be liable for imprisonment up to 1 year, or with minimum fine of 5,000 rupees and maximum of 3 lakh rupees, or both, right? Are we good here? So what is the punishment? Punishment will be given to company. Do we have imprisonment for company? No. Do we have penalty for the company? Yes. Minimum penalty 5 lakh rupees, maximum penalty 5 lakh rupees. For the officer in their default, imprisonment, yes, up to 1 year. Minimum penalty 50,000 rupees, maximum penalty 3 lakh rupees, right? Pay attention here. The language says or. So either the punishment will be imprisonment or fine. It will not be both. So when you read this penalties for default, be clear with the language. When it says or, that means it can be penalized either with imprisonment or fine. Imprisonment and fine both cannot be awarded together. Is this clear, guys? Are we good till here? Okay, so now only 2 minutes are left. So I will not start with the new topic, which is underwriting of commission. So underwriting, allotment of securities, and this private placement, and civil and criminal liability for misstatement. These are the few topics that have been left behind. And I will take up these topics either in the next class, or maybe if ICAI would want me to have an extra class for this purpose, I will do it. I'll discuss that with ICAI, but I will be taking up those topics as well. However, till now, the topics that we have studied, are we clear with this? Are we clear on this part? If there is a query pertaining to the topics that we have dealt today, I can take it up. Where does it say both? Penalty for default, please have a look. I don't think it's both. Let's read the bare provision. It doesn't say both. Okay, the last line says with both. Let me confirm it with the Companies Act. I think there is some error here. Guys, just give me a minute. I will confirm you whether it is applicable on both or not. I think there is some confusion pertaining to penalty here. I'm just confirming it to you. whether a defaulting officer can be penalized with both. So if you look at section 5, subsection 5 of section 40, it says, if a default is made in complying with the provision of this section, the company shall be punishable with a fine which shall not be less than 5 lakh rupees, but which may extend to 50 lakh rupees. And every officer of the company who is in default shall be punishable with fine which shall not be less than 50,000 rupees, but which may extend to 3 lakh rupees. Okay, so it's a 2020 amendment. It is with both or with both. Yes, sorry, I think I missed it. Okay, guys, I was wrong here. So in case of section 40, what I told was an amended provision, which is incorrect, even though I have written here rightly. So whenever a company is default in section 40, the company will be penalized with a fine of 5 lakh rupees and maximum of 50 lakh rupees. Defaulting officer will be penalized with imprisonment up to 1 year, or with a fine of 50,000 to 1 lakh rupees, or with both. I missed this line with both. I'm really sorry. My apologies. Any other question, guys? Okay. Anything else that any queries on this part? Are we clear with the concepts of shelf prospectus, red herring prospectus, deemed prospectus, prospectus, the contents of prospectus? I hope there are no confusions. All of you understand the concepts of dematerialization also? Okay, perfect. So with this, we finish our class for today. It was a good class. I know a lot is left behind, but I really did not want to rush a lot so that you are not able to catch up, because a lot of students keep complaining that, ma'am, you are going too fast. So I think as of now, the pace is appropriate. Neither it is too fast nor it is too slow. However, whatever is left behind, I'll take an additional lecture and complete the remaining portions for this chapter. Is that clear, everybody? So all of you have a good day. Take care, steady heart, and stay safe. I will meet you again on 20th, right? Thank you very, very much.